Hello, welcome to the show Explain to Me Capital Markets like I am your grandmother. And oh yes, I am the grandmother. My name is Lid K and I'll be taking you through this show. We are really breaking down concepts from the very complex, how you've understood capital markets before and which is, I assume, very complex, to simplified language and version. Now, today I am joined by our very own here, the Capital Markets Authority. I'll let him introduce himself and then we can get right into it.
Thank you, Grandma Lynn. My name is Joseph Magala Haumba, and I serve at the Capital Markets Authority.
Yeah, guys, I am very serious when I say I am the grandmother here because even when you look at this hair, it doesn't really mean anything. Just focus on the, what can I call it? Guys, please, I am going to be explained to as the grandmother. I'm going to be referred to as a grandmother. Now, Joseph, I want you to, as much as possible, get the basic definition of capital markets. I mean, if you're to look at this, it's right here. And I've really been thinking about it. When you look at the two words, capital and markets, it's basically saying that it is a market for capital. And I was like, what? It's literally in the name. How is it that we keep saying that this is very complicated stuff? So, in a layman's language, what are capital markets?
Sure. So, capital markets are just places or a place or mechanism through which capital is raised. Like you mentioned, it's just a market for capital. There's nothing difficult about this.
A market for capital.
Yeah.
So on one hand, you have people looking for capital.
Exactly.
On the other hand, you people
have those that have the capital
yes
and are ready to invest.
Yes. Yeah. And usually say excess capital.
Exactly. So this could be pensioners who have saved up some of their money through their working life, and so they are able to invest that money, and that money is then used by people that actually need that money purposes of growing their businesses.
Yeah. So in terms of the layman people, can anyone invest as long as they have some savings?
Yes, anybody can invest. This market is for everybody.
Yeah.
People have the myth that capital markets are for the rich.
Yes.
But actually, capital markets accommodate each and everybody.
Wow.
Yes.
If you say they accommodate everybody, what are some of these products that you can look at that can serve everyone?
Sure.
And you talked of, I know there are two categories we're talking about. We have individuals and then we have businesses. So how can the two be able to participate in the capital markets?
Okay, before I explain that, allow me to just break down what a security is, because in the capital markets, the products we deal with are actually securities.
Okay. Securities.
Yes,
as in securities, as in not security man, not security woman.
Yes.
But securities.
Securities. So a security essentially is just a financial product that does two things. It either creates evidence that you have ownership rights in a firm, company, or it is just an acknowledgement of a debt. Okay? And I'll explain this. So when we talk about securities that create ownership rights, these are essentially the equity securities. And that is why you have securities like shares, okay, which give you part ownership in a firm or company. On the other hand, you then have those that are used to acknowledge a debt, which are the debt securities. And that is where the term bonds comes in, that an investor lends money to a company or government, and at the end of the day, they get back their money, the principal sum invested, but also in the meantime, they are actually getting interest over a periodic period of time.
Yeah. So at any one point, they get back their capital.
Exactly. They get
at
back
the very least.
Yes, get back the capital at the end of the term of the bond, and also get interest. For shares, you're going to get dividends, which are also received from the profits the company makes at the end of every trading period.
Okay. Yeah. Wow. Do you recommend people to invest in shares, and what kinds of objectives would they be looking for in shares? Because I know that shares may have to be a bit patient, more patient than any other product. Can you speak to that?
Yeah, that's true. Ideally, if your investment objective is to have patient capital, then shares would be the place to go, because these dividends are actually the money you get from shares takes quite a bit of time. So you need to be a little bit patient, as it depends on the performance of the company. In fact, some companies, depending on how they perform, may not be able to give you dividends at the end of the financial period. So shares really are for those that are willing to wait it out. But the good thing is that once the profits come through, they're also worth the investment.
Yeah.
Yeah.
So that means if I am an investor, I have my money tucked away. As you can imagine, I'm a grandmother. I have some money somewhere, maybe in the back, in the bank, or somewhere in my bed. All I have to do is say, okay, when do I need this money back? Probably in 10, 20 years.
Yes. Yes.
Let me invest in a company that I believe in, whose financials I believe in, whose story I believe, and then they'll be able to get me a dividend. You said
Yeah,
that's the profits they've made.
Yeah.
I've also heard things like capital appreciation.
Yes.
Can you speak more about that?
Okay. So what happens is that you, as an investor, when you buy shares in a company, I'll give an example. You probably bought them at 10,000. After maybe 5 years, those shares have appreciated in value, right? They are no longer selling at 10,000. They're now selling at 50,000. So that means there's been a capital appreciation, right?
Yeah.
Because the shares have increased in their value.
Yeah.
Yes, that's what we mean by capital appreciation.
Thank you for that. And then if I am to look at the bonds or the unit trust, which you'll talk about, they have an element of I preserve my capital, right? At least I have it. For shares, am I guaranteed of my capital being preserved?
Well, it depends on how the business is being run, right? So I cannot say for sure that there is a guarantee that your capital will be preserved. It depends on how the directors are actually running that business. Yes.
Yes. And then talk to us about the unit trusts or the collective investment schemes. I know we like to abbreviate and say CISs. What are those?
Okay, CISs, or the collective investment schemes, are just an investment product that allows you to be able to actually collectively have your money pooled in a scheme. Okay, you have different people that save, say for example, 10,000. That money is put in a pool, and then it is invested as a whole by a professional who is also licensed by capital markets.
Yeah, I really love that. Because that concept basically means that I do not have to have the headache of looking at, okay,
Exactly.
what has this person announced on what has this politician announced that's going to make the stock market crash? And then I have to start running around looking at where to put my money. There is someone, a professional, a fund manager that can be able to look at that and do the analytics and be able to put the money that has been collected by everyone literally that has put their money in that pool, and then they're able to gain returns.
That's true. So all you need to do is just to invest, and then everything else will be done by the professional.
Yeah.
And the beauty is that there is diversification.
Yeah.
This professional is able to invest in different kinds of securities. They could be equity securities, such as shares, or they could be debt securities, such as bonds. And just to speak about the debt securities, we also have different types. We have the corporate bonds and the government bonds.
Yeah.
As you're well aware, that the price we pay for actually living in a modern economy is to pay taxes.
Yes.
So, but even the taxes we pay sometimes are not enough to fund our budget as a country.
Okay.
So government then has to look for money somewhere else to be able to fund the gap which has
Don't tell me the government borrows from the public.
Yes, the government borrows from the public through the government bonds.
Yeah.
Okay, which are also again distinct. We have the short-term government bonds, which ideally are the treasury bills, and then we have the long-term bonds, which are the treasury bonds, and that is 2 years and above. Yeah. While for companies, you have the corporate bonds, which are 2 years and above, and then the equivalent of the treasury bills for government is the commercial paper for companies.
Okay.
Yeah.
So let me get this straight. If I am a struggling business, I am the owner of the business, I'm struggling and I'm trying to get as much money as I can actually collect money from the public
Yes.
and be able to raise capital
Yes, you can.
Through issuing a corporate bond.
Yes.
That is borrowing
Yes.
from the public.
Exactly. But the catch is that company should be a public company.
Yes.
So if you have a private company, then the requirement would be that you need to go through the process of converting
it
from
into
a
a
private company to a public company.
So can I do that?
Yes, it's very possible.
Okay.
It's very possible.
Okay. Is it okay? So it's easy.
Very, very easy.
Wow. Very interesting. So we've talked about, just to recap, we've talked about the products in the capital market space. We've talked about the unit trust and how it's a collective. We've talked managed by the fund manager. We've talked about the shares, which are listed on the stock exchange, and they give you a dividend. We talked about the capital appreciation, the capital gained. Let's see what else did I miss. The bonds. We talked about the bonds, the treasury bills for short term under 1 year, and then the treasury bonds for more than a year.
Yeah.
Wow. This is interesting. I don't even know how I'm getting all of it. Guys, I hope you're keeping up. As a grandmother, I'm keeping up. I don't know about you.
Yeah.
So those are 3. I have heard about items like products like the ETFs. I think that's the exchange traded funds. What is that?
Okay. Exchange traded funds ideally are investment products that allow you to invest in a pool of different companies. So what happens is this is just an investment product which allows for or provides for a basket of securities. Yeah, I'll give an example. You might have maybe 5 listed companies on the exchange, okay? But then investing in each one of them is actually very expensive. So rather than investing directly in each one of them, you just invest in this exchange traded fund. Why? Because it is tracking the performance of each of these different 5 companies.
Is that like the one that was launched recently by the Uganda Securities Exchange?
Yes.
And the other East African securities exchanges?
That's true. The exchange traded fund, which tracks the performance of the 20 most performing companies in the East African region.
I think they call it the EAE20 index.
EAE20 share index.
20 share index to mean East Africa
Exchanges 20 share index. So you have 5 companies from different countries within the East African region. That is Uganda, Rwanda, Tanzania, and Kenya. So you're able to invest as a Ugandan in some companies that are outside Uganda just by investing in one ETF.
So it's collecting all of them.
Yes.
And then those are the top performing companies on the exchange.
Exactly.
That's brilliant.
Exactly.
So does that mean I am guaranteed of my capital share appreciation?
Exactly. So the idea is that rather than you investing directly in these companies, you invest just in this product which tracks the performance of each. So you're then able to actually use less money to invest in the companies.
Wow.
Yeah. But also diversify your portfolio. In the event that any of them is not performing well, the other can be able to cover up for any losses.
Interesting.
Yeah.
Grandson Joseph.
Yes, please.
Might I also ask something I had from my fellow grandmothers about derivatives? It's such a nice word. It sounds so nice. What is that?
Okay, derivatives, actually, the meaning is right there in the word itself. Derive. So these are financial products that derive their value from other assets.
An underlying asset.
Yes, exactly.
Like what?
And I'll give you an example. We have one of the derivatives we have are options. Okay? So you find that if you wait out until Christmas to be able to purchase beef, you may find that the prices are actually very, very high.
Yes.
Yeah?
Yes.
But if you decide to purchase earlier, you might actually purchase things at a much less price. Okay? So we have different types. We have options, we have futures. Now, the example I'm going to give you is about actually futures. So what happens is that you are able to agree through a future, which is an instrument, a derivative, that I'm going to be able to pay this money for my beef, say in October, for beef in December. And the idea is that you're locking in the price in October for something you're going to get later in December. So the derivative there is that the instrument
beef
that you have issued
is beef.
is the derivative, but it has its value from an underlying asset, which is the beef.
Okay.
Yeah.
Do we have those in Uganda?
Yeah, we do, and that is how they work. So the idea really is that you're able to manage a price fluctuation earlier on rather than spending a lot of money during the peak season.
Very interesting.
Yeah.
Now, if I am to move away from derivatives, which is really interesting, I've heard about the commodities market on the securities exchange. What is that?
Okay, the commodities market really is just a market for trading commodities. You all know that
You mean like posho, beans?
Yes, those agricultural products really. Uganda is an agricultural country. So we have the USE Commodities Exchange, which is a marketplace like any other, which allows for trading of these commodities. Okay? Yes. So
again, these are just fancy words, but really they come down to things we do on an everyday basis.
Things we do on an everyday basis.
Wow. Joseph, I know you are a lawyer. So can you talk to us about some of the capital markets regulations that exist in Uganda and how do those help us? For some of us that are watching and are probably asking what are the safety measures in place, what are the regulations in place, how would you best explain those to them?
Okay. First and foremost, Uganda or CMA Uganda actually upholds the best international standards when regulating the securities market. We are a member of the International Organization for Securities Commissions, which is the global standard setter for regulation of securities. We became members in 2016. Now, that body issues guidelines or directives on how securities can be regulated. And because we are members, we implement those minimum standards required. So that is where we start from, that even before we draft our legislation, we must make sure that it is in alignment with the globally acceptable standards because we are members of the International Organization for Securities Commissions. Now, we do have a number of frameworks that govern our entire legal framework. We'll start with the principal legislation, which are the acts. We have 3 acts that govern us. That is the Capital Markets Authority Act, Chapter 64. We also do have the Collective Investment Schemes Act, Chapter 65.
So when you say chapter, you mean that cap thing?
Yes, the cap. The cap. And we also do have the Securities Central Depositories Act, Chapter 60. Those are the 3 principal legislation that govern our market, and they were actually passed by the Parliament of Uganda.
Let's recap that. So the Capital Markets Act established the CMA as it is.
Exactly.
The Collective Investments Schemes Act, that's the CIS Act, set up the collective investment schemes. Then we have the Securities Central Depository
Act, which sets up the Securities Central Depository.
Okay.
So ideally,
that's the CSD.
Yes, the CSD. So
what's the difference between CSD and SCD?
Now, CSD is the one that we have at the Bank of Uganda.
Okay.
But now in our market, the securities market, we have the Securities Central Depository. Though they all play the same role.
Okay. One is just from the central bank and one is particularly around the capital markets.
Yeah, but also to clarify that the Capital Markets Act also provides for the products such as shares and bonds.
Yes.
And then the Collective Investment Schemes Act provides for just the collective investment schemes.
Yeah. Okay. Wow. At least we've learned a thing or two about capital markets.
Yeah, but just to add on to that, we also have regulations. Currently, we have 20 regulations that fall under each of these different acts, right? Under the Capital Markets Authority Act, we have 12 regulations. While under the Collective Investment Schemes Act, we have 7 regulations. And then 1 regulation under the Securities Central Depositories Act. Okay, and these ideally just provide for the procedural aspects of implementing these 3 different acts.
Wow.
In addition, we also have guidelines that we issue from time to time to our market participants on how they should be able to conduct themselves while engaging with the investing public. But not forgetting the fact that we are also governed by the East African Community Directives. We are members of the East African Community. And under the East African Community Act, it gives the powers to the East African Community Council of Ministers to issue directives on regulating the securities market.
Yeah.
So even Uganda being a member, we're actually required to implement those directives that are on a number of things, including collective investment schemes, securities exchanges, and the like.
Yeah, I mean, that's very interesting. And thank you for shedding a light onto that. Now, I also just want to go into investment fraud because I know it's a very hot topic right now. There's so many scams that are cropping up in any shape, size, or form, especially now with the rise of technology and everything. And some of them actually do fall under securities. So how are we as the Capital Markets Authority ensuring compliance, enforcement, action be taken against investment scams? And would you speak to that?
Okay. So ideally, as an authority, one of the things that we do is to actually protect investors. So when we detect that there has been...
Let me just stop you right there. It's right here. Capital Markets Authority, protecting your investments.
So once we detect that there has been a breach of our legal framework, we do conduct investigations into any matter, right? And once we actually confirm that the framework has been breached, then we take action. We could take enforcement action against both people that we regulate and those that we don't regulate, as long as what you're doing falls within our mandate as securities. Okay? But even for those that we regulate, we also do what we call surveillance and inspections to ensure that they continue to abide by our directives and regulations and the entire framework. Where they have also breached it, we also come in and take action. So that is how we are able to make sure that the market is actually safe for everybody to invest in.
Yeah, I mean, that's literally why we're here. But also, when you say protecting your investments, we don't mean go and invest in anything that is not licensed by us, and then you come claiming that, oh, I lost my money. Because at the end of the day, we believe at the Capital Markets Authority about, in a phrase we usually say, that an informed investor is a protected investor. We're giving you this information so you know that you can only invest in licensed and approved entities or persons by the Capital Markets Authority. Far from that, you're going to have to bear the consequences of investing in a scam. When you invest in a scam, there's nothing much we can do for you. Yes, we shall go and track down the scams, but for you, your hard-earned money has been lost. Because now for us, we cannot protect you if you're not investing with only licensed firms. And you can find a list of these firms on the CMA website. That's www.cmauganda.co.ug. Joseph, do you have any last words that you want to give to the people out there so that they can know and understand? Maybe just a parting shot.
Okay. My parting shot really is that we need to be very careful when investing, right? Just make sure you look out for any signs of investment scams. The first being that once anybody pressures you into investing quickly, just know that is a red flag there. Don't invest. Secondly, make sure that you understand the product you're investing in. Make sure you have all the information that you need for that product. Then also, make sure that the people you're dealing with are people that are licensed and approved by the authority. And we, like my friend Lynn here mentioned, Grandma Lynn, that list is actually found on our website. Where you fail to find it on our website, please don't hesitate to walk to our offices on 8th floor at the Uganda Business Facilitation Center.
Thank you so much, Joseph. Now, for those of us who are watching, I hope we have understood, especially my fellow grandmothers and grandfathers, you now have capital markets jargon broken down into digestible, understandable content. Now, if you are out there, you are our ambassador. If you've understood everything that has been said today, please go and tell everyone about investing in the capital market space, because if they are not, they're missing out on a lot of opportunities. Savings is not enough. If you invest it, you're having your money work for you. So how best can you do that? always verify before putting your hard-earned money in any investment product. Now, here at the Capital Markets Authority, which was formed by an act of parliament in 1996 to regulate and develop the capital market space, we remain steadfast in making sure that your investments are protected. I've been your host for the show, Linda K, your favorite grandmother. We'll be back for the next one. So please stay tuned and do not go away. Bye.